Good day, traders. Hoping that everybody's doing well today. Let's hop on to the pre-London, and see what we've got for the day. I hope my sound is good. My sound is good. Let me share my screen, and we can see what we can take advantage of. This is Master FxShifu from the Universal Forex Dojo. Awesome. There we are. I hope my screen is good. Drop your pairs on the side there, and let's analyze them, and let's see which ones will give us some good setups. Let's see if any will trigger in this session, and we'll try taking advantage of those. Okay, so these are from yesterday. I'm just going to remove all of these, and then we can definitely take advantage. Awesome, Yanda. I see you waiting for great content. That's good. I think Station wants us to look at US 30. Yes, a quick monster. Morning love. Stay blessed. The one wants us to look at GU. And Frank Edge, how's it, master? Awesome, man. I'm good on my side. Let's get on it. Just gonna break it down as usual. Start with the basics. Give you guys a bit of an overview of how we usually approach the market, and see where we can take advantage. And hopefully you guys will get the hang of it and catch some of the setups. Okay. So with US 30, now this was a beautiful setup we had. I think I shared this on last week's stream. I'm not sure if you guys got it. Okay. So from today, I'm just going to hop up onto the higher time frame, so I can give you guys a bit of a heads up of how we got to this specific setup. I'm going to erase it and basically start it from scratch. And then you guys will have an idea of how we take advantage of it. Okay. So starting with the daily, we usually want to see where key levels are, where interesting zones are. These are points where price is most likely going to react, either kick you out of a setup and cause you some problems. And so far, the nearest key levels to this specific price action right now is just two key levels at the 305.28 and 295.09. They're slightly a bit far, but you should be wary of them. What that means now is whatever setups that you do come up with at the specific points, you need to be careful. You need to manage your risk and hopefully get into a setup that works for you. Okay. So from this alone, we do see some beautiful structure from the daily, and we got a nice breaker structure right here, which is the most recent one. And good morning, Jonathan, which is the most recent one. And we saw price basically push up to the top side. And we actually looked at this OB right here, this massive one on the daily. This was a daily setup, by the way. And then once we got this decent OB here, we started hopping deeper into price, refining it until we got a nice OB to work with, unmitigated one. And once we got there, we got a decent entry point, a decent stop loss range that allowed us to come up with the proper setup there. Okay. So we found ourselves looking at this specific one here because it was the only unmitigated OB right here. And remember, like I explained last week, when you find yourself with this type of setup where you had a break of structure, price retraced, broke structure, and then gave you a low, which is this point here, 306.24. Your trading range is basically from this high all the way down here. And once you've got a trading range like this, you need to bear in mind that you can take setups above the 50% mark. So anywhere above in this region here, you can have a good setup. But then now, because we are targeting high RR trades, we try to refine this region as much as possible, and of course incorporate order blocks to try and take advantage of better setups. I hope that makes sense. So with that said, in that 50% mark, we did find this unmitigated OB, this one right here. That's also another one there. But then again, you will have too much room at the top to work with. Okay, so I hope that makes sense. So what you can do, I'm going to do the setup now on the hourly, so you guys know exactly where we took it from. There we go. So this is how your setup would be. You can use this one. It has a bit of a bigger stop loss range, which will give you potential for R if it hits. But then now we usually try target higher RR potential, just because we want to take advantage that even if it does go 50% in, then you at least have a good point there. Okay. So on the hourly, we do have an unmitigated OB here. Just gonna zoom in a bit, which is right here. Now we're refining it even more. So ideally, what some traders do, they just use the OB alone. I prefer to take the highs as well, just to be on the safe side, just to avoid getting wicked out. And then our setup is getting much better. That's a potential right there. And then what you can also do, if you really want to refine it even further, you can drop to as low as 15, 1 minute, doesn't really matter. It's up to you and whether you prefer high risk trades. And remember, the higher the risk, the more likely you are to get wicked out. And also the more likely you are that you're going to get some very good R's on it. And remember, the tighter the spread, the tighter the stop loss range, the quicker you get into profit. The quicker you get into profit, the more you start moving your break even and taking partials. I hope that makes sense. So now just refine it even further. And there we are. There's our potential US30 setup. Somebody was asking me, how did we get this one here? I'll break it down to you now quickly. There we go. Perfect. Beautiful. So you'll have a setup that looks exactly like this. Now with this one here, remember when I was telling you guys, explaining you guys why we don't use limit orders? It's because of setups like these. So if you're using limit orders, you probably have gotten triggered here. And once you got triggered here, you would have been kicked out here. That's the biggest reason why we don't use limit orders. So when you stop orders and you literally approach it the way we do, what we do is we literally put alerts halfway of the stop loss range. Now what that means is once price hits this point in the middle, the 32601, then you place your stop order, a sell stop. So now you're using momentum. So what that means now is you're only allowing price to literally drop in, trigger your trade, and starts getting into profit. By the time it gets to 1 hour, you're already at break even. And as it keeps going deeper into profit, you start shaving off some profits. So with this one, price did go up, and then our sell stops were triggered here. It came, triggered the trade here, retraced the bit, and eventually went all the way in, giving us a good trade. So that's the biggest reason why we don't use limit orders, guys. If you check also the new issue that we've launched, it basically takes care of that. Hope that makes sense, guys. Okay, so we are good with. Let me just move that. We are good with US13. I hope it makes sense for you guys. Any questions on US30, just drop them on the side there. And then I'll just go back and explain it a bit more. So right now, what we'll do is drop an alert right in the middle and then wait for price to basically tank from there. So now remember, this is taken from a daily time frame. This means now, even deeper in price, you can still find some setups. Let me just move this a bit to the side. Whilst we wait for a setup like this to trigger, I'll share with you also another setup that we had from yesterday, which was very quick, but I'll just give you guys a bit of a breakdown on it. Okay, so on the 4-hour US13, I'm basically looking at this region here. Let's see if we can find anything in there. We probably could, but then now there's not enough information to take a setup from it, because you know that price is going back up to the top eventually, but now in the process, this going back up to the top, we could potentially find something like this, which would basically give us a bit of room to find a potential buy. So now until we see something like that, let's analyze it a bit more. We did have a break of structure here. So now, which means this zone has to be respected on the 4-hour, by the way. So when price does retrace a bit and then it holds this level and then comes back to break this zone, we can find a potential entry at an auto block wherever the trace is in. But now for now, since that hasn't happened yet, let's hop on to a lower time frame. The 1 hour didn't have anything. That's why I just kept it now. I'll look at your questions as well now. The 30, there's nothing decent that you can actually work with. And remember, guys, you always want to work with clean price action. You really don't want any drama on your charts. You want to make it as simple and as straightforward as possible. Always, always, always try to do that. Okay. So there's nothing on the 4 hour, nothing on the hourly, nothing on the 30. So we are going to jump on to the next pair. I'm going to mark this. Whilst I do that, let me just take a look at your questions on the side. I see the Colonel wants us to look at GU. I'll hop onto that. GJ as well. Okay, here's the two we just did. Don't forget to like the stream, guys. Don't forget to like the stream. And I see Colonel is asking, don't I make use of trend lines? Not necessarily. Not necessarily. I don't use trend lines. I just use structure. Structure just, it'll basically show you what you're basically looking for with trend lines. For example, you'd look at, let me just take a look at, I think it's this one. You look at something like this and then start using your channels and so forth. And then as the price keeps dropping to the side, to the bottom, you'll buy, it goes to the top, you'd sell, going down with it. No, we don't use that. We literally just focus on structure, higher highs, lower lows, break of structure, retrace into an order block, get into an entry, refine the entry, use momentum, and allow a setup to work with you. I hope I've answered your question there. If I didn't, just rephrase a bit more, and then I'll continue answering to the best of my knowledge. I see Frankie is asking a question. Can you explain why you're so sure the price will go down? What if it decides to continue going up? Unfortunately, I'm not sure the price will go down. We are just using probability here. We're just trying to take advantage of the most probable scenario. Now, for example, with this one here, if you take a look at what price has been doing from the top here, literally from the 21st of April, with a decline, a hectic decline, just use that one, retracement, and then when it retraced, it respected this high, declined a bit, retraced, broke this one a bit, which was a bit of a fake one, and then continued down, breaking structure, retraced, respecting the previous lower high, going down again, breaking structure, retracing. So what we are anticipating is for it to respect the previous high again, the previous lower high, and continue to break structure at the bottom. So that's literally the probability that we're using. And if you check, if you go back in time and basically back test and so forth, you will see just how many times this occurs. Sometimes you will be wrong. Sometimes you will get faked out. And I'll show you a typical one that happened yesterday. Fortunately, our stop loss was so tight that we managed to grab as much from it as possible. Because sometimes it does go against you. You just have to make sure that your risk isn't such a point that it doesn't break you. I mean, you can get 5 of these wrong, and then you get your correct ones, and you're still in profit. So just make sure that whatever you do, you minimize your risk, capitalize on the trades that actually do work with you. You literally capitalize on those. I hope that makes sense, Frank. I've answered your question. Okay. And then I see, yes, straight price action. That's true, Starboy. Straight price action. How do you determine the movement? I don't understand your question there. Shredder Compton. Why are we on a daily chart in the London session? No, we're not on the daily chart. This is a price action that actually went into the daily. So what that means now is because we are focused on, say, for example, on this hourly, and there was nothing here, and you saw price actually pushing up to the top, you might find that it actually does get into the zone, which is part of a daily setup, and it does trigger it. So you could still get that in the London session. So that's actually why we're looking at the daily, but ideally you want to look at the 1 hour and drop down from there. And on the hourly, there's nothing there. Okay, I hope I've made that. I see Skill Gamers saying, I hope you guys are doing great. I just want to know why there are so many people criticizing this way of trading. I've been studying it for a while and it makes total sense. Cheers. Yes, it does. Yes, it does. I mean, at the end of the day, in order for you to actually get it, you'd need to have practiced it for a bit. You'd need to have really used it. And that's literally the only way that it would work for you. Okay. Hope that makes sense. This is another setup. I think this will be something for Connor as well. Can you see where price is right now? It's literally close to a setup here. And this is not an hourly setup, by the way. I'm just going to go back into a higher time frame so I can show you what's been happening. It's been taken from this daily move. Can you see that? We had a price dropping. And just erase it. Just do it from scratch. I think that'll be more beneficial for you guys. So this is a daily time frame. You had price basically move from the top here, or from way up there, reached a point here, retraced, broke structure. Now it's going back. It literally got into this massive OB as we speak, which is a daily OB, by the way. And because it's inside there, you can refine a bit more and try to find better OB to work with and drop from there. I hope that makes sense. So I'm just going to go deeper into this and try to find an OB that we can work with, which is actually this one here, unmitigated candle right here, which is found on the hourly, and always take the highs. Usually I prefer getting stop loss range of less than 10. That's too high, so I'll drop even further to try and refine it. Sorry about that. To try and refine it. Guys, do stop me if you don't understand something, then I can just explain it to you guys. Remember, guys, this was this whole range here was that hourly order block. So now since we're refining it, we're still focused on this very region. We're just looking for unmitigated candle, which would be this one right here. Right here. You can refine further. So ideally what I'll do, if it's still too big for me, I'll just use the FIBs and then just go halfway of this range until I eventually get a nice, decent stop loss range. But for now, we are going to keep to this OB here so we can make it simpler and easier for you guys to follow. Okay. And then refine, go back into the hourly. And as you can see, because it was taken from the daily and it is in the London session, it still does give us, it's very close to our setup, by the way, very, very close. So we'll have that play out, have your alert right in the middle, and then of course your price point. So when price does get to this region, then you can have your buy, your sell stops, and of course take advantage of momentum and keep partialing along the way. I hope that makes sense, guys. I hope that makes sense. So there's your GU setup, and I'm going to mark it right there. Okay, awesome. I see David is saying price will fill the gaps before it's ready to make that move to the top of the high. Yep, definitely fill the gaps. Okay, don't forget to like the stream, guys. Don't forget to like the stream. I see CEO Wolf is asking a question here. Hope I pronounced that correctly. Good day, Shifu. Thanks as always for your time. Pleasure is all mine. What do you feel is more important for the novice to learn? Trading with structure or order blocks? Are they ideal partners to be learned simultaneously? Well, once you start understanding structure, then you can incorporate order blocks inside there. Then you'll start getting deeper and deeper, understanding fair value gaps, understanding wyckoff and so forth. But structure is literally one of the biggest and most important things you'd want to work with. The trick now is once you get the structure and you understand your trading range, where you trade from is the trick, especially if you want to target your higher RR trades, which allow you to be incorrect most of the time. Because if you start trading with your 1Rs and your 2Rs, it's a bit difficult because you need to maintain a higher win rate. So if you start looking at your 3+, 5+, and then that'll be a totally different story. I hope that answers your question there. But do get into structure. I hope I got into structure earlier than now, but we learn. I used to do a lot of indicators, a lot of break and retest, a lot of working with support and resistance structures. They work. Nothing is wrong with them. It's just that now this is more profitable for me, and it allows me to trade less. Okay, I hope I've answered your question there. Nice zone to play off, definitely. Am I from South Africa? Yes, Uncle Malumi from South Africa. EJ, let's hop into USGPY. Before we do, I'm just going to explain to you guys the method, the idea behind using stop losses from using stop orders. So this is a setup that I think it was Frank who asked. I think it was Frank about how do we know the price is going to go in your favor. We don't. This is literally a setup that went against us. We did use, let me just delete that. Okay, let me move this big candle here. We used this structure here, which went pretty well, by the way, breaker structure. So we anticipated price to do that. But now on the higher time frame, it literally tanked. But now the beauty of using our trades, using the way we enter trades, is once we had the setup, which was taken from this candle here, price got into the range with this candle right here. It got halfway and then buy stops were triggered. And then as soon as it retraced, it triggered the trade and went all the way hitting, I think it was 3.6R before it went back. By the time it went back, all the stops were moved, partials were taken. And yeah, that was a pretty decent setup from yesterday. And it happened rather fairly quickly. So that's one of the reasons why we've got the Wushu, by the way, to keep up with such trades. Because sometimes you'll be too slow to take advantage of this, especially if you're trading manually. Okay. Hopping on into EJ. I see David Rodriguez is asking, do you use stops, limits, or execution at your zone? I use stops. So once price gets into the zone, especially halfway in, I'll use a stop order and then allow momentum to basically trigger and move into my favor. If it doesn't, then we lose that setup. That's a sad reality, but always stop orders. I never, ever use market execution or limit orders, ever. Sometimes I do miss some very, very good setups because of not using limit orders, but then I'll rather keep money in the bank than risk it and allow being wicked out. Especially now when you get deeper into trading like this, you're going to start using some very, very tight stops. You're going to start using your 5 pip stop losses, your 3 pip, depending on your broker, of course. And once you use those, it's really, really not a smart idea to use limit orders because you will get wicked out most of the time. I hope that makes sense. Okay, EJ. So now this is a beautiful one, actually. Just hopping into the 15. I'll go back to the hourly now. You'll see now we've got some beautiful structure happening here. So we had price move from the top side. You can use these ones here. There's minor moves, but now they're far back. I'm just going to focus on the most recent ones. Always focus on most recent price action. Right here, it's a bit irrelevant for us. It's not going to work with us. Just by looking at this with the naked eye, you can already see the downward momentum. Okay, so already you have a breaker structure here. Remember now, the lower time frames you use, the more likely you are going to get wicked out. So do manage your risk well. You've got your breaker structure here. You've got your massive OB right here, which is most probably going to be respected. And then you can refine it in further. And because of the time frame you're looking at, your stop loss range is going to be very, very tight. Okay, so you have this unmitigated OB, very, very clean, extremely clean, by the way, guys. This is one of those textbook type of examples setups. Okay, so the OB is still fine. Still fine. Let's see how big the stop loss range is. 5 pips. Okay, go back into the original time frame you used to find the setup right there. And then you'd have your sell stop when price gets into this. So now can you see how difficult it's going to be if you're trading manually? Now, this is literally a 2 pip move, 2.5 pip move inside this range. So when price gets there, by the time you get the alert, by the time you start inputting the setup, it's already gone. So now that's why you'd rather use bigger stop loss ranges and allow yourself the time to get into the setup, or just use our Wushu toolbox. It just places automatically. So we do this like literally right after the London, right after this session, input the prices. And when price does get into the range, it'll trigger your stop order. And then, of course, if it does hit 1R, it'll move your stop to break even. Hits 3R, it'll close half the trade. 5R, close a bit more, move stop to 2R, and just keeps doing that along the way. Okay, so that'll be a 15-minute setup. And then we're going to hop into the hourly and see what the hourly is looking like. The hourly is giving us exactly what we saw on the 15. Now, with practice, the more you keep looking at these setups, the more you keep looking for structure, the more you start seeing them from the naked eye. For example, here, from the high, you can see you had this push down. Sorry about that. Let me delete that. We had this push down, and then a retracement, push all the way down, retracement, push down, retracement, push down, slight retracement, which is where we are. So there you can see just by this that if you go deeper into price, you go into your 30, 15, 5-minute time frame, you're going to see price structure even clearer than how it looks right now. So for now on the hourly, we're just going to maintain this 15. Let's see how the 4 hours looking. Okay, the 4 is pretty interesting. We do have a slight BOS right here, slight one. And then, of course, you've got your OB right there. And this is where now you start finding yourself having multiple setups on one pay. This is one of those pays that you can actually keep for probably the rest of the week. You have your low here, you push to the upside, retracement, respecting this low, slight BOS, and then, of course, expecting to either drop into this region and push to the upside. That's if we are going to go bullish. And now you see how this setup that we have in the 15 agrees with this move happening. So if it does tank and go deeper to pick up some orders here, you are going to find yourself having a nice trade in this region here. Okay, I hope that makes sense, guys. So let's refine this 4-hour one and leave you guys with it so you can hold on to that for the next couple of days and hopefully pick that up. Okay, so we need an unmitigated OB. We need one. Go deeper into price. This is the 4-hour one, by the way, guys. Remember that. Bear that in mind. Okay, so here's unmitigated one right here. This one here. And this one is mitigated. So keep that in mind. This one also mitigated. So let's stick to this one for now. I was explaining just to my students yesterday that the reason why we want to always use an unmitigated one is if price is going to come back to pick up some orders here, the chances are there's a higher chance that it will come back for specifically this one here and not these ones because they are mitigated. And that's one of the reasons why we use the way we trade, the way we enter setups as well, is to protect us against price actually coming and literally going against us and going all the way down. So we'd rather be out of a setup like that than getting too quickly. Okay, hope that makes sense, guys. This is a 4-hour setup. There we go. And then you'd have this all the way until, and this is a very low RR type of setup. So what we do, like I just explained now, either go deeper and deeper into price until you find much lower refined OBs, or just go halfway off this whole stop loss range, which is based off the order block that's unmitigated and the ones at the bottom. And then, of course, have your stop loss range in that region. And remember, the tighter the stop loss range, the higher the chances of you not getting triggered are. So keep that in mind. So this setup that you can hold on, do give us feedback on the next live stream if it did work out for you. And hopefully you'll remember, we do a lot of these every day, so chances are we're going to forget about it. So we've got two setups on this one. We've got the 4-hour right here, and then we've got the 15-minute right here. Okay, it does agree with what we're saying. And I was telling the guys yesterday as well, I'm just going to explain it to you guys a bit. Let me just look for a plain area, whereby when you structure that looks like this, because you're always anticipating price to respect these regions and you're anticipating price to come back and pick up orders. That means in this bullish move, you should be having some sells inside. When price does come back to pick up an order here, you left some sells inside. Although overall you are bullish in structure. So keep that in mind. So that's why you can have a buy and a sell on different time zones. And people will anticipate that you are slightly crazy, but it does happen. Okay. What other pair should we look for? I see Sylv is asking another question here. It does make sense. I'm trading structure right now, and while moderately consistent, I'm only able to target 2 to 3 hours. Order blocks seem the way to move beyond that. Thank you. Awesome, awesome. That's how you start. So maintain consistency with the 2 to 3 hours, and then eventually, as you start getting better and better and consistent, you're gonna start reducing your stop loss ranges, which will start increasing your risk to reward ratio. That is literally how you want to be trading moving forward. Danko Mzanzi, you got this. Definitely, definitely. Silitona says he wants to learn how to identify structure. What are the major points to learn? Okay, it's a tricky one, but I'll just try to simplify it for you just now. This is valuable. Awesome, awesome, awesome. So with structure, I'm going to do it on a live pair. Let's see what other pair you guys want us to look at. I see OO wants us to look at AUD. AUD USD. Let's go back down. I think I have it somewhere here. There we go. Okay, we do have a setup here as well on it. I'm just going to do it again from scratch, guys. That's from yesterday. As you can see, it's not triggered yet. It's probably from a higher time frame. Okay, so trying to answer Letonola's question on structure, I'm going to go into this. I see Christian is asking, how do you know it will not fly bullish? You don't know that it will not fly bullish. That's why the way you set up, the way you enter the setups is very, very important. If you use limit orders and then it triggers and it flies out, then you're definitely out. But now if you're using stop orders and waiting for price to actually confirm, so us using stop orders is confirming that price is not going to go extremely high. If it does get into the range and then from there it fails to break the highs and it comes back down, that's when it triggers our setup and that's where it goes on. I hope that makes sense. And then I see it's Mac is saying that OB at 35,200 is probably the better trade. We'll take a look at that. And then as we say, did you consider mitigation happened when wicks touch wicks or body of 50% overall candle size? Usually when wicks touch, that's when you do it. And Nathan asking which risk to reward. I'm not understanding your question there. Can you just rephrase that? Just rephrase that for me, and I'll just answer you. Okay, AUD USD, going back to Laton's question on structure. So structure, you're always looking for two things. You're looking for a low or a high. Once a high is formed, you're looking for the low to be respected. Once the low is respected, wherever this turns, it can turn literally at it, can turn right there, it can turn here, and then you have another high being formed, breaking structure, which is this point here. This is how you start understanding structure. Once you have break of structure, what you're anticipating is for a zone to be respected and for price to retrace and then break structure again. And once that happens, this must be respected. So that's where you start with understanding structure. Always higher highs being formed or lower lows being formed, break of structure, lower lows or higher highs being respected. And then from then, once you understand that notion right there, then you can start looking into order blocks and finding the precise point of entry where you want to enter. And I'm going to show you guys that on this specific chart right now. Okay, so this is a bit dirty. So I'm going to try to go into a higher time frame. I'll also do it on the lower time frame for you guys, so you can at least have something that does trigger in this time frame. Okay, so you've got your low here. I'd always remember, in order for you to take advantage of this structure, always try to look for significant retracements. You don't want to look for those retracements that are literally minor. You want to see a move. I hope that makes sense. Like this one here. This is rather very insignificant. You can look at it, but it's a bit insignificant for me. So as you keep practicing and understanding it, it'll work for you. Okay, so we've got this low, we had this high, retracement, break of structure, and price is basically ranging here. Retraced, respected this low, break of structure, retraced all the way, respected this low, break structure. So now what are we expecting it to do? We're expecting it to respect this low, retrace either into this OB here. It probably did leave some candles here into this region here. And then now, in order for you to take advantage of this, you want to really, really refine this, because if you have a setup like this, And this is essentially where you want to start, by the way. So to all the guys that are trading structure fairly new, this is where you start, literally not refining, just understanding how to pick your order blocks. And once price does get into the order blocks and move from there, then you can start refining it. So once you get this until this point here, you're good to go. Okay, so let's refine this OB here and see if we can find a decent unmitigated OB to work with. So there's a couple of them here. And remember what I just shared earlier. Sorry about that. What I shared earlier about your trading range. So this whole region here, from this low to this high, is your trading range. But now you always want to make sure you're below the 50% region, which is actually this whole order block, by the way. But yeah, you always want to make sure you are below. And the lower you are, the better your chances of getting decent RRs on your setup. I hope that makes sense. Okay, so let's move deeper into price and try to refine it. Just move that. Nothing is stopping you from getting into a setup. Maybe if you're fit. Okay, let's go deeper. Here's an unmitigated OB on the 1 hour. You can go refine it even further, which is what I ideally want to do, prefer to do. Here's one right here. Go deeper into it. Almost mitigated. And then you can go further again. Try to get tighter stop loss range. Tighter stop loss range means better R's. And by the way, guys, once you master this and you understand that you can be wrong most of the time, but you literally decide that regardless of how wrong you are, you target higher RR trades, you're definitely good to go. And that's where we are currently. We don't really care much about the 2 hours, 3 hours. We really want to target your higher RR trades. And like I just explained earlier, it kind of allows us to trade less. Okay, there we go. Perfect. So there's your setup on AUD USD. I hope that was a simplified version of structure and understanding OBs moving forward. Okay. And then you'd have your alert right in between. And when price does get in here, and like what I think it was Christian. I think it was Christian asking if the other one would go high. In this case, if it goes lower, because you'll be using stops. If it does go lower, then you just won't enter the trade. And then if it does, then hey, you lose out on that one. Okay. And honestly, guys, we need to start learning how to take losses. If you're trading and you are failing to take losses, believe me, you're in the wrong field. You have to really, really know and understand how to take losses. They will happen, whether you like it or not. You will have losing streaks, whether you like it or not. And that's the nature of the game. Your job is to literally be profitable, to increase the probability of being correct, is to make sure you profit. Don't cry about losing trades. Cry about how many trades you do profit on. And when you do profit, you maximize on the profit. You literally capitalize and ensure that you take as much from that trade as possible. I hope that makes sense. Okay. I see here say, is that a candle close above, or do you consider a wick break of structure? Whether you're looking at the close or the wick, ideally, I want to see a bit of move above it. If it's just the wick, sometimes I do ignore those setups depending on where the setup is from. So, for example, if it's this type of setup where you can see it's very, very bullish, and then you have a slight break, then I'd consider it. But now, if you're looking at something that failure formed, say, for example, we're still in this region here, and then this breaker structure here was very, very short. Say, for example, it was right here. To show you now, say, for example, it was right here. I would literally not consider it, mainly because of this wick as well. So it all depends on the actual trend that's happening, the actual price action at that very moment. But then again, it comes with practice. The more you do it, the more you find yourself in this type of situations and what you do, and you journal it, the better it is for you. So I hope that makes sense. Okay. How do I determine order blocks? Shucks, that's another one. I think if you okay, let's see. That's going to require a huge explanation, but I'll just get into it hopefully in the next London session. I'll just break it down for you guys. Until then, let's just hop onto the next setup, gold. Remember, we do have okay, this one here, we probably are going to get a nice sell on the hourly. Let me just go deeper into price. And then I see Mala wants us to look at Euro USD. Okay, so on gold here, we do have this set up here at the bottom. That's from the daily, if not a 4 hour. So let's see what current price action is looking like in here. Nothing decent there. So here you'd need this zone to be broken for you to start considering one of these for a good sell, because now you did have a BOS right here, and then price actually dropped, retraced, and then you're still waiting for it to basically break structure first before you can start looking for some sells. Until that happens, this is not a good setup for us to look at while using the way we trade. Okay, so let's see if deeper price action would give us something. Let's take a look at the 30. Nothing there, nothing there. So if this zone here was broken, say for example, this candle here closed, sorry about that. Say for example, this candle here closed slightly above here, you'd have been looking at some bullish moves from there, because you'd have had this move up, retracement, respected this area, break of structure, retracing, respecting the area, and look for some buys. But now it turned before, so it's one of those setups that you actually are going to have to stay away from for a bit, and look at it from a distance, and see how that works out for you. Okay, so let's see. I'm going to look at the next, well, the last one before the London Open, guys. Do drop a pair. I see Andres here. Execution is asking if I have to do USD ZAR. That's actually one of the pairs I do not trade at all. I actually don't remember trading USD ZAR ever, mainly because of the spreads. It's one of those pairs that I just, we trade very tight stops. So when you trade tight stops, you want to avoid exotic pairs and all these other, you just want to stick to the majors basically. So let's look at that. Okay. I see USD. Let me look at Euro USD now. And then I see SB says, could you show again how you define OB when you drop down to the time frame? Okay, I'll do that for you just now. What do you think of the news coming up in some minutes? I usually avoid trading when the news are on. I literally just sit on the side and then leave it from there. So we're going to look at Euro USD and then, of course, DAX. And remember now, the news, something I always forget to mention. I just avoid trading at the news. Always avoid trading at the news. Okay, Euro USD. Okay, 4 hours still have this one. Somebody asked there about refining. So let's see if we can find a setup that could probably trigger today. I'll look at GCAD as well. Somebody wants us to look at GCAD and GJ. Okay, not GCAD, CAD JPY. On the hourly, okay. I know a lot of people like trading the news because you're going to get those massive moves. Okay, let's see. Nothing here. And remember, guys, I always keep saying you will find a setup on literally most of the time frames if you just look deep enough. You'll always find a setup. Now, I don't think I'll touch Euro USD on the lower time frames. Nothing there. Okay. I'm just going to try find a pair, then I'll just refine. Somebody just asked for us to refine there. Don't forget to like the stream, guys. Don't forget to like the stream. GJ. Okay, I'm just going to erase this. Go into the hourly, see what we can find here. Okay, you could find a potential buy. So you had a break of structure right here. Had a break of structure right here. And then your OB. So now we're looking at OBs, order blocks, and that's where one of the guys asked How do you find OBs? So usually you want to find, when you're bullish, you want to find the last red candle that caused this big break of structure. So the candle that caused this BOS, that's usually where you want to start. So in this case, and the last one, like the most significant one, by the way, not these ones here. The last one that caused the move, not the break, the move that caused the break. I hope that makes sense. The move that caused the break. So in this case, in this BOS, it will be this one. And then in this BOS, it'll be this one here. Always take the lows, of course. And then with this one here, it'll be this massive one here. Okay, so I think if we can just go back a bit on this video, you'll eventually find what we're looking for. So in the hourly, there we are. Let's refine. One guy asked about refining. So you've got this candle. So now when you refine, you always want to make sure you stick to this region. So let's go deeper into price. And you're looking for unmitigated ones, by the way. And most are actually. Most are. Let's go deeper again, 5 minute. Because price kept turning here at the bottom. This one did get mitigated. This one as well. This one got mitigated. Most of them did. So I highly doubt price is going to come back in this region. Let's see on the 1 minute. Yeah, I highly doubt price is going to come back. The most recent one would be this one here, but I think it got mitigated, or actually didn't. So this is the OB that we'll look at, unmitigated OB. Go back into the hourly. And then let's see. There we are. So we'd have a region that looks like that. You can refine it further so you can get a better RR there, but you'd have something that looks like that. Just mark it. I hope the refining made sense there. I hope the refining made sense. There we go. Then you have your alert right here. And then, of course, once price gets in there, you will look for a good buy in that region. So I think for now, with this specific one, I'm not going to refine it further, just so you guys can actually play around with this and see how it works and move on from there. Okay. Awesome. DEX, let's see. This one turned literally at our entry point. This is one of the reasons why we missed some trades, by the way, guys. Because we are always focusing on stop orders, it turned right here. There's no way we're going to catch up with that. It's completely gone. But now in this moving to the downside, I'm going to refine it and show you guys that in the hourly, you can still find something decent. So we had the high, the low, retracement, break of structure. And overall, because we are bearish, I think it was on the 4 hour, we can definitely agree with this move. So we had this BOS right there. And then now you're looking for an OB to work with, unmitigated. So this one you can already see is unmitigated. And now some people literally just use the OB. I always prefer to take the highs as well, just to minimize on my risk and also allow price to actually move in that region. So this is the area we're working with. Refining would mean going deep into price to find another unmitigated candle inside this. So ideally, you're looking at this one right here and also this one unmitigated. So you can either use, wait, not that one, this one, sorry. There you go. Literally just touched and then take your highs here, of course. And then you'd have your setup on this specific one and it would look like that. You can do this in the 1 minute, guys. You can do this in the 15. But remember now you're going to get wicked out a lot of times. So try and be wary of that and understand your stop loss ranges and your risk management. Okay, hope that makes sense. There we go. And that's your setup right there. Okay, I see Frank is asking, do I fight Kung Fu? No, I don't. I just love the discipline in that field. I love how they literally stick to the rules, stick to the processes. And yeah, that's actually the approach that we use to trading. Stick to the rules, follow the rules. One of the guys was asking yesterday that if price turns at 0.9 R and you can see it getting there, do you have to change your break, your move, your stop to break even? And then I told him that no, leave it as is. You change it at 1 R. Those are the rules. Stick to the rules. It'll allow you to be consistent in the long run. So I hope that makes sense. Uncle Monim is asking, how long have I been trading? A long time. And I think I started trading, well, I got introduced to trading literally when Bitcoin was launched. That's what, 09, 08, give or take, somewhere there. So along the way, studied finance, got a degree in finance, majored in some of the Forex trading and so forth. So yeah, I'm quite deep in it. Okay, guys, I'm going to hop off and get on to the London Open. You can drop me some questions. You can telegram me. If you get into the Trading Nut channel, you can find my name there. And you can also hop on my site and check me. It's an inbox and we'll definitely share what we can. Do check out our bootcamp. Check out our Wushu Toolbox. That's a game changer. And our advanced signals. Shifu, is this literally how you go about setting up your trades each day? Every single day without fail. Every single day, that's it. Hop onto the trade. Of course, we go deeper into it and add on other things that we do teach in the bootcamp. But yeah, literally every single day, process-driven, wash and repeat. There's one of the biggest phrases I always share, which comes from Bruce Lee. It says, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. That's the approach we use. One process as many times as possible. And because we have done the numbers, we have reached the good law of average. We've seen the numbers. We've seen how they work out. We are done doing the kicks. We are literally just perfecting. That's it, guys. I'll catch you guys next week, Tuesday, on the Trading Nut channel. Other than that, you can check out our YouTube channel. We do the live stream every single day, right before the London Open. We do send the link onto the Telegram channel and, of course, trade in there. Happy trading, guys. Cheers.